well. My next guest says that they'll do everything in their power to prevent that from happening. At the same time, he's earmarked some investments which would be left particularly vulnerable in the event of a Eurozone breakup. Luca Solca, Global Head of European Research at Credit Agricole Chevreux, says that financials, utilities and telecoms would be particularly sensitive. Among the utilities, he'd back away from EDF, an Italian energy company, Snam Rate Gas, at the probability of breakup rises. He also says, as you can see, France Telecom would lose its appeal, as would Danish brewer Carlsberg. So I want to get a little bit more on this. Luca Solca joining us now live from Paris. So tell me, you're saying that utilities, telecoms would be the most sensitive industries, that they would suffer the most from any sort of euro area breakup or indeed escalating tensions. Why is that? Take us through your rationale.
Well, the logic for that is threefold. On the one hand, we're looking at companies that are predominantly exposed to the European market. We would expect that in a disorderly euro breakup, the consequences for the financial systems and for the broader corporate system, and therefore for employment and consumer spend, would be very extreme. And as a consequence, companies that are predominantly focused on European customers would suffer. We also think that in that environment, credit would be very difficult to come by, and therefore we're looking at companies that have high leverage in their balance sheets. And we also think, again, that in an environment like that, top-line revenues would be under pressure, and therefore we focus on companies that have high operating leverage in order to identify the most important risks. When you use these three criteria combined, then you identify primarily, at least in the top of this list, companies that operate in utilities or in telecom, because they're predominantly European focused, they have very high operating leverage, and their balance sheet are also more stretched than in other sectors.
Luca,
conversely, we would see that companies that have high exposure to global markets would probably be faring better.
Well, so then, okay, let me get to those in a minute, but I'm just curious because when we speak about these industries, these companies that are most sensitive to euro area breakup, I mean, a euro area breakup is well, to say it's a big deal is well an understatement, isn't it? This would be a momentous event. Liquidity, a credit crunch in funding markets. If companies weren't able to access liquidity, that would impact companies across the board, wouldn't it? Across all of these industries, not just the companies in the industries that you mentioned. Even those companies with strong leverage on their balance sheets. Well, that could only last so long, couldn't it?
Well, I think so. I mean, in the report that we published this week, what we argue is that a disorderly breakup of the euro, but even a straight breakup of the euro, would be a systemic like kind of event. We would risk, in our view, and based on our analysis, getting back to a 1930s kind of environment where the banking industry and the financials industry at large would be largely in need of recapitalization. Credit would be very hard to come by, and therefore the repercussions of this financial crisis on the real economy would be very, very severe indeed. And
in terms of the stocks that you like right now, you know, amongst those on your list, Hermes, do you and BMW, do you like those big sort of luxury brands with exposure? You said you like companies with exposure to global markets, specifically emerging markets, and if so, how concerned would you be about those markets' lack of immunity to the crisis as tensions escalate in the Eurozone and elsewhere?
Well, I would expect that given the magnitude of the crisis, those markets could also be affected, but I would also see that there's an underlying structural trend of demand development in those markets that would sustain in the long term consumer demand. And therefore, companies that operate in the consumer industries, be it in staples or in discretionary consumer, would be, I think, favored by a long-term positive structural tailwind.
All right, thanks very much indeed, Luca Solca.